Imagine walking down a street, right, in a city you've never been to before. You walk past this dirt lot and it's completely overgrown with weeds. I mean, there's garbage everywhere and maybe a rusted out fence. You wouldn't even glance twice at it. But a local real estate developer walks past that exact same dirt lot and they stop dead in their tracks. They see an absolute gold mine. Because, they are looking at the city's zoning plans and they know that in exactly 2 years, the city is building a massive central subway station right across the street from that garbage-filled lot.
Right, yeah. They aren't valuing the dirt as it exists today. They are calculating the future intersection of like human attention, convenience, and digital infrastructure. Yeah. So they're basically pricing in a future that hasn't even arrived yet.
Exactly. And today we are taking that exact lens and applying it to digital real estate. So we're doing a deep dive into a stack of notes on the Solana domain name market. Specifically, we're looking at a trench trader's guide to spotting undervalued digital identities way before the rest of the crowd catches on. It is honestly a masterclass in market psychology, recognizing patterns, and predicting where digital culture is moving next. Brought to you by Negotiate.name, the simple way to bid on a curated collection of over 3,000 Solana domains without locking up your Solana. Browse premium.sol names, make unlimited offers, and see what you can negotiate before anyone else does.
And, for you listening, even if you have never touched a crypto asset in your life and have no intention of ever doing so, you really want to understand this mindset, because learning how value is spontaneously assigned to entirely new digital assets, it teaches you how to read emerging narratives in literally any industry.
Yeah, it's universal.
Yeah, it rewires your brain to spot opportunities that look, frankly, completely stupid to the average person right before they look painfully obvious to everyone else.
Yeah, and I really want to jump straight into that concept of looking stupid at first. Because to understand how these domain names are valued, we basically have to get inside the head of a trench trader. These are the people operating deep in the crypto trenches, right? They are trading meme coins, they're tracking anonymous wallets, they're hanging out in these incredibly niche, early-stage digital communities.
Right, yeah, they are deep in it.
And their core philosophy seems to be that by the time an opportunity makes sense to the general public, well, all the real value has already been extracted.
Absolutely, because if it's obvious, well, it's already priced in. The trench trader is hunting for mispriced attention. They're looking at a Solana name, which today might literally just look like a random word or a weird string of characters just sitting dormant in a digital wallet. The general public looks at that and sees the empty dirt lot. Yeah, just garbage. Exactly. But the trench trader is evaluating whether that specific string of characters is going to become, say, a vital piece of software infrastructure or a massive cultural status symbol like a year from now.
But wait a second, let me push back on that a bit. If these things are selling for basically nothing right now, and nobody really knows what's going to pop off, why wouldn't I just buy 100 cheap names for pennies? I mean, isn't that just a smart, low-risk lottery ticket strategy? Like, if I'm playing the real estate game, why not just buy 100 cheap, dilapidated houses in a total ghost town where nobody lives, just hoping that one day, by sheer luck, the city decides to build a highway there?
I mean, it sounds logical, but it's actually a huge mistake.
Yeah.
Because you aren't buying lottery tickets in that scenario, you are taking on a massive liability.
Wait, really? How so?
Yeah, so you're falling into the exact trap that destroys traditional domain investors when they enter this space. Rule number one is that a low price tag does not equal latent value. If you buy 100 dilapidated houses in a ghost town, you now have the immense opportunity cost of your capital and your attention just being locked up in digital junk.
Ah, okay, so it's a junk inventory. So what actually defines a bad name then, even if it costs next to nothing?
Well, weak inventory usually has very obvious friction points.
Mm.
The name is maybe too long, or it's awkward to pronounce out loud. Maybe it relies on an internet meme that died 3 months ago, or it's just so hyper-specific, like Bob Smith plumbing Atlanta, that it relies on one theoretical wire who is mathematically never going to show up to buy it from you.
Right. Bob is probably not looking for a Solana domain anytime soon.
Exactly. So the name is cheap because the market is correctly pricing it at zero. Nobody wants it. Undervalued, on the other hand, means the asset possesses actual, undeniable quality. It have a clear use case, maybe broad identity value or massive narrative potential, but the broader market is just too distracted by today's shiny object to notice it yet. You're looking for a gap between current price and future utility, not just a bargain bin price tag.
Okay, that makes sense. So if we are actively avoiding the digital ghost towns and we're looking for these undervalued, up-and-coming digital neighborhoods, how do we actually identify where people are going to want to live? There has to be a framework for this, right?
Yeah, there is a brutal, non-negotiable question you have to ask yourself about any asset you hold. In the trenches, they call it the natural buyer test, or I guess to use the Gen phrasing, who eventually apes this.
Who eventually apes this? Got it.
Right. And if you are holding a digital name and you cannot vividly, specifically picture a highly believable future buyer for it, you are holding weak inventory. The market doesn't reward a name just because you minted it. It only rewards a name because somebody else desperately needs it to solve a problem.
So this is basically like playing matchmaker for the future. Like I'm standing on the digital street corner holding up a sign that says automate or research, and I'm just hoping a future tech startup walks by, sees it, and decides they absolutely have to have it.
It is matchmaking, yeah, but it requires calculated anticipation, not just blind hope. You have to understand that narratives are what moves these markets.
Yeah.
A digital asset can sit there doing absolutely nothing, totally illiquid, for months. Then the broader market narrative rotates toward that sector, and suddenly it's the most valuable thing on the board. You aren't just buying a sequence of letters, you are buying the future story that makes those specific letters indispensable to someone else's business model.
Let's make that concrete for the listener. Say artificial intelligence agents become a massive, everyday consumer trend. Suddenly, any clean domain name related to agents becomes highly sought after. Or maybe creator monetization booms, so creator-focused payment names become critical infrastructure. What really stands out to me here from the sources is the concept of optionality. You don't want a name that only appeals to one very narrow buyer.
Oh, absolutely. Optionality is your safety net. If you hold an AI-related name, let's say the word broker, it shouldn't just appeal to one specific startup in Silicon Valley. It should appeal to AI developers, to automated trading bots, to data platforms, to decentralized finance protocol.
Oh, wow. So it could go in a bunch of different directions.
Exactly. The more distinct futures that your name fits perfectly into, the better the hold. You are de-risking your prediction by multiplying the number of potential natural buyers.
And the buyer doesn't even have to exist today. That's the part that really shifts your perspective. You might be holding a name for a company that literally hasn't been incorporated yet, or an AI agent that hasn't even been coded yet. But given the current trajectory of the technology, their future existence is highly probable.
Yeah, you are basically betting on the inevitable trajectory of human behavior and technological friction.
Speaking of human behavior, let's dig into how that maps onto the actual categories of names that hold value. Because human ego is a huge driver here, right? First up, you have first names, like Alex, Sarah, Mike. This is a pure identity play. People desperately want the clean, unmodified version of their own name as their global digital identifier. Nobody wants to be Alex_99. It's identity inventory with a massive built-in, highly motivated buyer pool.
Yeah, it operates exactly like a premium vanity license plate. But instead of just showing it off at stoplights in your hometown, you are displaying it on a global ledger to every person you ever transact with. The status signal is exponentially larger.
Then you have short names, 3 letters, 4 letters, 3 numbers. The value driver here is visible scarcity. They are incredibly easy to remember, and they fit perfectly into a user interface. But a random short name, like maybe XKeyJ, is still weak if it doesn't have any brandability. It has to mean something, or at least sound phonetic. From there, we move from identity to pure utility, payment names. Words like pay, send, tip, settle.
And utility names are fascinating because they connect directly to the native behavior of a digital wallet. You are pitching to a future checkout tool, a payment processor, or maybe a massive content creator who wants to accept frictionless tips.
Right.
The utility is so obvious that you don't even have to explain the value proposition. It does exactly what it says on the tin.
We also have trading names, which are hyper native to the trench culture itself. Words like alpha, whale, sniper, sweep. These appeal directly to the heavy trading culture on Solana. You have trading bots, key opinion leaders, private signal groups. They all need brands that resonate with their specific audience. And then, going back to what we touched on earlier, the AI agent names, words like broker, vault, research. This is where it gets kind of sci-fi.
Well, it's not just sci-fi. It's actually a very practical user experience problem that needs solving right now. As software and AI agents begin interacting with human beings financially, those agents need a clean, public-facing identity. Human beings are hardwired for trust.
That's very true.
Yeah, so you are not going to hand over $1,000 to a decentralized financial agent whose public identifier is a terrifying string of 50 random alphanumeric characters. I mean, it looks like a virus. But you might trust an agent simply named broker. The clean name bridges the trust gap between human psychology and raw code.
Okay, I track with you completely on identity, utility, and AI infrastructure. But I have to push back hard on this next category. Meme names. We're talking about names based on internet slang, dog coins, viral jokes. Come on, this just sounds like a massive rationalization for buying a useless joke name. A utility name like Sen makes total sense. It's like owning the 1-800-PIL-UMBER phone number. It gets a job done. A meme name is a viral candle that burns out in a week. How does an internet joke even come close to the functional value of real utility? I mean, why would a trench trader risk their capital on a meme?
Well, that is the exact friction point where traditional financial logic breaks down in a Web3 ecosystem. You are looking at utility purely as a mechanical function, like 1-800-plumber gets your pipes fixed. That is mechanical utility. But what you really have to understand about this specific market is that culture itself is a form of utility.
Okay, you're going to have to walk me through how culture acts as utility.
Think about it like a country club membership versus a subway ticket. A subway ticket has mechanical utility, right? It gets you from point A to point B. A country club jacket doesn't transport you anywhere, but it signals belonging. It grants access, it establishes trust among a specific group of people. In these digital spaces, community belonging drives far more fervent economic demand than pure mechanical utility. A culturally resonant meme name, if it actually survives the initial hype cycle and becomes entrenched, well, it acts as a flag for a digital tribe.
Oh, I see. So it's basically about tribalism.
Pure tribalism. A community will rally around a native meme name. They will use it as a brand, a shared identity, a status symbol, just to prove they were early to the joke. 1-800-PAUL-EMBER-HEAD gets you a service. A premium, culturally dominant meme name gets you a rabidly loyal tribe.
Wow.
And in the attention economy, tribes command massive liquidity. That being said, your initial skepticism is completely warranted. 99% of memes do not survive, they die in a week. It takes extreme, almost anthropological discernment to know the difference between a fleeting joke and a lasting cultural artifact. Most people get absolutely burned trying to play that game.
Yeah, that makes sense. So let's assume we've picked a winning category. We have a strong thesis. We found an up-and-coming digital neighborhood. Maybe it's a clean utility name or an AI agent name. How do we know if the specific word we chose is actually usable in the real world? Because the underlying mechanics of the word itself matter. Like, clean spelling is absolutely paramount. These names are meant to travel. People have to say them out loud, type them into search bars, share them in group chats. If a trader buys a deliberately misspelled word because they think it's a funny meme, they are actually destroying the long-term demand for that asset because they are introducing friction.
Oh, exactly. Friction is the absolute enemy of adoption. The moment a user has to stop and think about how to type your name, you've lost the transaction.
There is a brilliant heuristic for this from our notes called the podcast test. Like, could a creator seamlessly say this name in a video or a live audio stream? Could they say, hey, send the funds to this name and have the audience instantly know how to spell it? I have to laugh because applying this test to myself, I mean, I can't tell you how many times I've had guests on the show where I stumble over reading their social media handles. If I have to tell a listener to follow someone at _, number 4, letter Z, dash, I feel stupid saying it, and the listener is never going to type it in. The name just has to speak for itself effortlessly.
Yeah, and beyond just the audio friction, there is visual friction. A Solana name doesn't just sit as a URL at the top of a web browser. It lives deep inside a wallet interface. It shows up in public transaction histories, on decentralized leaderboards, inside portfolio tracking dashboards.
It's everywhere.
Exactly. So it needs to look premium visually. If it looks clunky, if it has weird numbering, it looks like a spam email address or burner account, it degrades the trust of the interaction. It really needs to look like a permanent, trusted institution.
There's a great rule of thumb here. Do not buy names that require a 10-minute pitch. If you find yourself having to aggressively explain to someone why a name is actually very clever and valuable, well, it's a forced narrative. You're basically trying to make fetch happen.
Absolutely. And this specific intersection of aesthetics and culture highlights a massive blind spot in the market. Traditional domain investors from the Web 2 world, the guys who made millions flipping .coms, they might come in looking for standard, boring, corporate keywords and completely miss what looks trustworthy and native to Solana culture.
Oh, that's a good point.
Yeah, and on the flip side, a native crypto degen might buy up a ton of culturally relevant slang but completely ignore the timeless rules of clean spelling, broad brandability, and visual aesthetics. The true alpha is found by the person who can synthesize both perspectives. The asset has to feel culturally native to the ecosystem, but it must possess the structural integrity of a premium traditional domain.
And that structural integrity brings us to the final piece of the puzzle, which is the actual mechanics of trading these things. Because you can know exactly what makes a name inherently valuable in theory, but if you don't understand the market dynamics, you're just going to get stuck holding a very expensive bag. To succeed, you have to study what people are already flexing on platforms like X. You have to look at token names that are gaining traction, pay attention to shifting community slang. Culture creates the demand long before it ever reflects on a financial chart.
You really have to operate like a digital anthropologist before you ever put on your investor hat. You have to watch the evolution of the language in real time.
Right. But there's a huge trap here. When you're watching that evolution, you can't just watch the new domain registrations. Anyone can pay a tiny fee to register a new word. Which makes me wonder, if I'm just sitting there watching a live feed of new domain registrations rolling in, aren't I essentially just watching a feed of what other people hope is valuable? I mean, I'm just watching their lottery tickets print, not actual value being created.
That is a crucial distinction. Registrations are just bets being placed on the table. It's cheap to register a name. The aftermarket, so the actual offers being made, the secondary sales taking place, that is where the winning tickets are actually cashed in.
Got it. So the aftermarket is the real signal.
Yes, real trench traders operate on pattern recognition within that aftermarket. They aren't distracted by the thousands of random words being registered today. They are hunting for price gaps in the premium inventory that is already circulating. They are looking for the incredibly high-quality name that has been temporarily ignored because the market's attention is currently obsessing over a different, fleeting, shiny object.
Yeah, and the floor price, the absolute cheapest names available in a collection, that does not tell you the whole story. The floor is just the most desperate inventory. It's not the best inventory. And the liquidity in domains is vastly different from the liquidity in tokens. Like a meme coin trader is used to instant gratification. They can enter and exit a position in 3 seconds. But with digital real estate, you might have to wait 6 months for the right buyer to finally realize they need your specific asset.
Right, and that patience is the toll you pay for the asymmetry of the opportunity. An illiquid asset requires an incredibly strong stomach. You are holding a premium piece of digital real estate, and you are just waiting for the neighborhood to finish being built around it. There is actually a brilliant distinction we need to make here between being early and being random.
Oh, I love this concept from the sources. Break that down for us.
Yeah, so being early means you have a solid thesis. The market doesn't fully understand the future category yet, like AI agents needing clean public identifiers, but the trajectory is inevitable. So you are early to a real trend. Being random, on the other hand, means you just bought a 5-word misspelled inside joke that has absolutely no use case, no natural buyer, and no optionality. Early requires vision. Random is just noise.
Early is a thesis, and random is just noise. I think that is the perfect way to encapsulate this entire strategy. So, what does this all mean for you listening? Spotting undervalued digital assets, whether it's on Solana, in traditional equities, or in emerging tech sectors, it's not about rushing in to buy the cheapest item on the clearance shelf. It is about predicting the precise intersection of future narratives, natural buyers, and clean utility. It's about ensuring the asset passes the podcast test, surviving the visual friction of a user interface, and having the discipline to find what is genuinely early rather than getting distracted by what is just completely random.
And, if we step back and look at the macro picture, this isn't just about crypto. Understanding how to read culture before it hits the financial charts. Knowing how to spot latent value in things the crowd currently ignores or mocks. That is the fundamental skill of spotting trends and seizing opportunities in literally any industry. The mechanics might change, but human psychology really does not.
It all comes back to that empty dirt lot we talked about at the very beginning of the deep dive. Are you just seeing the weeds and the garbage, or are you capable of seeing the future subway station? Which brings me to a final thought I want to leave you with, to mull over as you go about your day. Think about the overarching direction the internet is heading. We are moving toward a more decentralized web. If digital wallets eventually become our primary passports for the internet, if they eventually replace our emails, our bank logins, and our social media profiles entirely, what does your current digital footprint say about you? And if you haven't claimed your own permanent digital identity yet, are you already priced out of owning your own future?